Palantir's journey reads like the classic underdog story, from a modest $118 million in Q1 2020 to industry-leading blockbuster quarters today, proof that its AI and data analytics platforms are woven into the very fabric of government and defense operations. This isn't fancy marketing spin, it's a testament to real-world utility and adoption of advanced AI, moving beyond glossy slide decks into battlefield decision-making and policy-shaping briefings. But as Palantir's stock defies gravity, surfacing on the lips of every growth investor, some voices in the wilderness are sounding alarms. Is this a sustainable ascent, or are we perched atop a shiny, data-driven bubble waiting to pop? A meteoric leap, $118 million to $884 million. When a startup's Q1 looks like a good side hustle, back in Q1 2020, Palantir reported just $118 million in revenue. Fast forward 5 years, and that quarter has ballooned to $884 million, a 650% increase. Deep government and defense integration. Palantir Gotham is embedded in intelligence community workflows, synthesizing phone logs, satellite feeds, and more into coherent action plans. Palantir Foundry Power supply chain analytics for defense contractors, helping track parts from subcontractor factories to frontline units. Real-world AI utility. When tornado warnings blare over local news, it's often Palantir's models crunching atmospheric data. Humanitarian missions in conflict zones use Palantir to optimize aid convoy routes, minimizing risk and maximizing reach. This isn't theoretical AI, it's AI in boots on the ground, guiding decisions where seconds and accuracy mean lives saved. Bubble or breakthrough? The growing chorus of skeptics. Palantir's stock price has rewarded early believers handsomely. Yet some analysts warn that with forward P/E ratios above 200 and EV/sales multiples north of 70, the valuation looks more like a funhouse mirror than a clear window into future earnings. Voices growing louder include, Financial Times Trivariate Report, labels Palantir one of the most expensive use large-cap stocks ever, a one-stock bubble, prone to correction if growth falters. Nasdaq Analysis notes that AI, next big thing, cycles historically end in sharp pullbacks. Ultra-high valuations are the canary signaling trouble ahead. Seeking Alpha warns Palantir's rally may have been too fast, too furious, with enterprise spending likely to normalize and leave shares scrambling to justify lofty prices. If Palantir's stock were a hot air balloon, it's now drifting above the clouds, spectacular for the view, but one tiny gust could send it tumbling. The bull case, Wedbush and Fitzgerald in the arena. Despite the bubble narratives, ultra-bullish analysts remain steadfast. Their rationale? Long-duration contracts, unparalleled AI moat, and a pipeline that Wall Street underestimates. Wedbush's conviction. Dan Ives, senior Wedbush analyst, calls Palantir a generational tech name, reiterating an outperform rating with a $140 price target, implying 14% upside from current levels. Ives highlights a $795 million Maven contract modification with the U.S. Army, pushing that deal's total value to $1.3 billion. A first for Palantir. Wedbush believes federal AI spending is just ramping up. Palantir's product moat in efficiency-focused solutions will translate into successive windfall quarters. By the way, if you are benefiting from the content so far and want more like this, hit the subscribe button, turn on the notifications bell, and comment the word more. Just go ahead and type the word more so I know. Now that you've commented, let's continue. But wait, we kindly request you to support us by joining us and becoming a member. Find the link in the description section below. Keith Fitzgerald's bold $200 call. Fitzgerald, a noted independent strategist, set his Palantir target at $200 per share back on February 5, 2025, arguing that once the sheep catch up, the stock will dominate the AI narrative. According to Fitzgerald, waiting for consensus analysts is like designing a camel by committee, slow, ugly, and prone to spitting out underperformance. His $200 target presumes sustained 40% plus annual growth over the next 2 years. Imagine a racehorse with rocket-powered horseshoes. Wedbush and Fitzgerald believe Palantir has strapped those on, while skeptics worry the shoes will combust under pressure. Balancing act, growth versus valuation. The crux for investors is whether Palantir can keep executing at hyper-growth speeds, closing 139 deals in Q1 and building a $2 billion backlog, or if the market's optimism has overshot reality. Key considerations: contract backlog, RPO at $1.9 billion, Palantir has nearly half of its 2025 revenue already locked in, providing a steadier revenue runway than speculative AI plays. Margin expansion, adjusted operating margins of 40% plus and free cash flow of $370 million in Q1 suggest healthy unit economics, if they can maintain scale. Geopolitical tailwinds, rising defense budgets and AI regulation in Europe could either boost or constrain sales. An unpredictable swing factor, enterprise churn risk, big cloud vendors, AWS, Azure, and nimble startups are hurling new analytics tools weekly. Palantir must keep innovating or risk being dethroned. Investing in Palantir today is like boarding a supersonic jet, exhilarating, with clear skies ahead, unless an unexpected storm hits, in which case you'll wish you'd packed a parachute. Investor playbook, what should you do? Position sizing, core and satellite, limit Palantir to a 5 to 7% allocation of a growth-oriented portfolio. That way, if it soars to $200, you're celebrating big. If it dips 30%, you're not calling your broker in a panic. Time horizon, short-term traders can ride momentum spikes, using technical stops near recent support, $120, and targets near analyst levels, Wedbush's $140. Long-term bulls who believe in AI's secular rise might $cost average, smoothing entry into potential pullbacks. Diversification, AI ecosystem, balance Palantir with other thematic plays, chipmakers, NVDA, cloud platforms, MSFT, and selected AI crypto tokens like FET and AGX, which historically correlate with Palantir's market moves. Non-AI anchors, blend in defensive sectors, consumer staples, utilities, to mitigate volatility. Best and worst case. Best case blockbuster, Palantir secures a $3 billion plus hyperscale government contract, expands Foundry into 50 new Fortune 500 firms, and sees AIP revenues triple. Shares surge to Fitzgerald's $200 target by end 2026. Base case steady ascent, Palantir grows 30% annually, margins hold at 35%, backlog replenishes every year. Shares trade in the $140 to $160 range, respectable gains, but far from a straight line ride. Worst case whiplash, a major defense budget cut, combined with a high-profile Foundry implementation failure, undermines confidence. Institutional funds trim exposure, shares slump 40% from highs before rebounding modestly. Data-driven decision time. Palantir's transformation from $118 million Q1 wunderkind to $884 million powerhouse is nothing short of spectacular, proof that its platforms are battle-tested in both government and commercial theaters. Yet sky-high valuations invite bubble talk from Trivariate, Nasdaq, and seeking alpha analysts. Meanwhile, Wedbush and Keith Fitzgerald remain firmly in the bull camp, eyeing $140 to $200 targets based on contract prowess and AI momentum. For investors, the path forward is a balancing act. Harness the rocket fuel of AI upside while strapping in buffers against potential turbulence. By minding position sizes, matching your time horizon to your risk appetite, and diversifying across the AI ecosystem and beyond, you can navigate Palantir's thrilling, unpredictable flight. It's our privilege that God, the creator of heaven and earth, will bless us abundantly, make us the head and not the tail if we love him and obey his commandments. Please acknowledge him in your plans and he will direct your paths. Proverbs 3 verses 5 to 6. Want more information? Please check the description section. Also again, if you are interested in supporting us more, consider becoming a member. Link in the description section. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. There are 3 more important steps to build wealth. First, like this video, subscribe and then turn on the notifications bell. If you do this, you highly motivate me to continue bringing to you educative and transformative videos every week. Do not miss out on our future videos full of knowledge and wisdom. All I am asking is your subscription. Thanks for joining us today. Your support is appreciated so much. Do not hesitate to share this video to help someone. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Thank you. See you in the next video by God's grace. We love you, and blessings to you.